Hello, this is Amy from mytradeaims.net. Let's do a review of the first 2 hours of the London session today, the 2nd of December. The first thing we're going to look at is the German 40 now, the DAX. So we're going to look at 6 charts. That's what I look at every day. First of all, German 30 DAX started at the London Open over here. We had a signal straight away to start with. I did not take it. Emma took it over here. The reason I did not take it is that these days I don't trust the DAX volatility at the start. So it was a good trade. It went around 1 hour in our favor, and then it came back and turned into a break even. Around here I was interested to take this again, but there was this wick that was not really fun to take, but because price was below the lows and it was showing some intent, I thought I would take the trade. But as you can see, it closed really down here, and I hit the sell bar button, but it did not accept it because price was already below the low, and I missed this one. Never mind, because if I took that, this would be a break even already. Then after that we have this signal, but that is basically, if you consider this as trend channel, which would look like so. I will ignore the wicks. I'll rather connect more lines over here, and this would be let's say an offshoot. And here I don't draw a line because I already have the 10 EMA showing me. But so this is your tight trend channel, which means that on the 5-minute chart it's going to be a breakout phase. There we go, 1 2 3 4, and then we can see that there were levels to the left here, here, and we have levels previously as well, so I can extend them, and I already had those in mind. So that made this a good signal, and this one also a good signal. But as you can see, it already hit the levels to the left, and it's a trend channel. And then when it breaks this formation, we'll have 3 trend candles followed by 2 pullbacks. If you are into reversals, you could have taken this trade and taken a 2R, but I do not do that. And after that, there was one mistake by somebody who took a trade here, rationalizing it that it was now above the open price, which is, I think, over here, and then it's a pullback, so it wasn't good. But I didn't like it. Why? Because 1 2 3, that's the 3rd pullback, and there's still trading range, so I don't like this stuff. But then, as I was delivering a lecture on this, I actually took a trade over here, and I soon realized that this was not really the best trade. And the reason for that was, when I see that this is my, when I see a strong move down, so that's my swing high and this is my swing low. Now after that, as long as price stays inside the high and the low of this strong move, whatever happens to the right of it, it's inside this range. So if I'm in the mode of trading inside a trading range, then I can probably go long on this and stuff. Otherwise, this is not a trade. So this was not a trade for me, and then I managed to get out, break even out of it. So that's the only trade I took today. Meanwhile, US 30 was doing interesting stuff. So on the 5-minute chart, we can see that it's a very tall trading range, but because you have very strong trend candles in there, you will see setups on the 1-minute chart. For example, when you see these 2 trend candles over here, there's going to be something. Let's have a look. Here you go. That's the setup at the open, and then it goes down, it goes up. It's very similar to what DAX was doing, but then it did an interesting thing over here. So can you see here that same concept? I have a swing high there, and then I have a swing low there. Goes up, comes down, pulls back. Around here you can assume that it already has done a double bottom here. So if you want to take one more trade, and there is 1 hour distance at least, so that if it comes here, you either take profit or move stop loss to break even, then you can take it. Otherwise, if you are prudent like me, if I can call myself that, I wouldn't take this, because I want this setup to be down here. I want this price to go down, then come back like it did over here, and then set up. Then I will take this trade and we are going to dance. But that did not happen, and for the same reason I did not take this, and I did not take this. And I think the main reason that I did not take US 30 is that I do not trade US 30 during the London session. I will trade it after the New York Open. But if you look at this from market perspective, it was a very interesting scenario, which was clear to me in hindsight, not in time, because I wasn't paying attention. So you have a strong move down, then up, push down. That's your triple bottom, right? So that means that this becomes your 1 and 2. And guess what happened here? So that's the change. That's the change. That's the trend change. It breaks the swing high, pulls back, and gives you a nice, lovely signal. To go long, you'd be targeting those highs. Again, this is difficult, you know. When I see this is like a trading range for me. Not like a trading. It is a trading range because I have highs hitting the previous lows. I have lows with triple lows. And then price comes back to this level. I cannot take this trade. Now, it did work, right? It went up. But the thing is, if you took 100 or 500 of these setups, the overall sum of your wins is not going to be too far up. What I'm trying to say is that statistically, when you take pullbacks inside trading ranges, and if those pullbacks are near the highs or near the lows, like this one. So for me, the difference between this sell and this buy is nothing. It's the same. This one was a break even. This one in turn into a 2R or a 3R, a very strong one. But if you keep doing this over and over the long term, this does not have an edge. You'd rather have this set up above the high and then go up, and you would see a lot more winners. So that's the US 100. What is this going on here? Well, that is a trade going on the US 100. Now it's inside the trading range, but what you can see is a very clear move down and a nice clean pullback up. And what do we see? We have a very pronounced level over here. So if I take a trade here and a stop loss is up there, I can easily move my stop loss to break even when it comes to the previous lows. And the fact that the trade is in is simply because we want to take advantage of a possibility which is happening over here on the hourly chart, right? Do you see this? A very strong move down and then price going sideways. So the idea here is that if we got in up there, maybe we can actually catch a very big winner. But ideally, I should be waiting for it to come down here, then pull back and then take the trade. As you can see, price has hit the orange dash line, which is basically because of this one. This over here means if price goes 1R in my favor, which is the distance between entry and stop loss, move stop loss to break even. And that is the algorithm. Semi-automatic trading. Once you take the trade, you don't have to touch it. So it's going down, and I am tempted to actually move this away from this to maybe probably bring it over here. I can actually do that. I'll do it right now. And so what it will do, that it will increase I'm break even anyway, and there is an opportunity. It might actually bounce over here and stop me out for break even, but it doesn't matter. It's the test account and not my main account, so I can play around with this. And if it goes further down, then I probably will have a 3 or 4R, and there's a possibility of that happening. So let it happen. If we go to the 1 minute chart, now what we see is there's a possibility for us to actually wait for it and come back to it and take a trade on the 1 minute chart. Actually, the impulse move now is a little bit too far now, I think, but still it can set up. And then I want to talk about the pound dollar. Now look at the pound dollar. It was an interesting setup. Actually, I started making this video particularly to talk about this scenario over here. So it's not a pronounced trading range, but what we see is a move up with a pullback down. So we have a swing high, and then that swing high was broken with a nice trend candle here. So the thing I want to talk about is that I will trade the 15-minute chart, but I don't trade 15-minute chart by going directly to the 15-minute chart. At the end of the trend candle, I would drop to the 5-minute chart. So when I dropped to the 5-minute chart, I saw that it was still going up. and then it started coming down. I was expecting a signal here, did not receive it, and then price went further down. So if it goes below, and if it's like a two-legged pullback, I'm not going to trade it on the 5-minute chart anymore. And especially when price goes below the 10 EMA, what you want to do is go to the 15-minute chart, and there you would have a nice, lovely signal because of the 1 and 2. And it's the reason I like this is because it is hitting the previous high, so it becomes a break and a retest setup. You'd go long here, stop loss here, and it goes up. Maybe it will be a break even, maybe it will continue to go and hit those levels. Let's see what happens. So that is the thing for today. Let's have a, before we finish, let's have a look at yep, it has hit my 2R over here, but as you can see, I have moved my target to let's see, yeah, about slightly less than 4R, and there is a good possibility that it might be hit. So let's see what happens. There we go.